Many have noted that passive investing has performed better than active investing in the U.S. market. What we found over the past 10, 5, 3 years, and even this year, is that active investment in the non-U.S. markets has a better chance of outperforming. It's been difficult for U.S. managers to beat their benchmark, say the S&P 500, but in the international space, a majority of active investment managers have beaten the benchmark, be it the MSCI EFA or the MSCI ACWI ex-US. Earlier in my career, say 20, 25 years ago, international equity was used primarily as a diversifier. What we've seen over time, and part of this is attributable to the creation of depository receipts, is that companies that want to tap into the U.S. capital markets have gravitated to either U.S. accounting standards or IASB accounting standards that are very similar to U.S. accounting standards and have published their financials in English. So it makes it quite easy for an American investor to invest abroad. But as this has happened, the markets are a little more fluid, capital moves more quickly, and the diversification benefit has diminished some, but the level of safety you have as an investor has improved. The level of transparency, the level of governance, and the ability to discern what's actually happening in the financials. It's important to consider just how big the opportunity set is outside of the United States. If you consider the market capitalization of the benchmark, the MSCI, approximately half of that index is represented by companies that are domiciled in the United States. Half are outside of the United States. But if you consider the economic activity of the world in terms of total GDP generated in countries outside the United States, a whopping 75% of economic activity is actually generated outside of the United States. And what's even more astonishing is that 96% of the world's population resides outside of the United States, and a large portion of it is growing much more rapidly than that of the U.S. With regard to active investment in the international markets, what we found is that there are higher economic growth rates outside of the United States in certain markets. There's more public creation of equity in these markets where a number of these companies might have been privately held. And frankly, we think that as U.S. investors, we have an advantage versus our competition outside of the United States. Investment management is one of the things Americans do well.